Can a machine really understand greed? Can an algorithm actually feel fear? For decades, we've thought of financial markets as this world of cold, hard numbers and charts. But what if the biggest driver isn't logic at all, but raw emotion? Today, we're going to dive into whether artificial intelligence can finally decode the very human psychology that moves trillions of dollars every single day. Let's get into it. Way back, long before we had any of this tech, the economist John Maynard Keynes had this incredible insight. He called it animal spirits. That mix of confidence, fear, optimism, and just gut feelings that drive us to buy or sell, often for reasons that aren't perfectly logical. And that right there, that's the core of the challenge. Financial markets are, at their heart, deeply and fundamentally human. So how does technology even attempt to solve this puzzle? Well, the main tool in the toolbox is something called sentiment analysis. Put simply, it's all about teaching computers to read. And not just the words, but the feeling behind the words. The whole goal is to take the pulse of the market, to measure its emotional temperature in real time. Is everybody feeling bullish and excited, or is the market bearish and terrified? This is the tech we're digging into today. All right, so let's start with the optimistic view. How is this technology supposed to work? What's the promise here? Okay, so it works in a few key steps. First, the AI just plows through mountains of text, and that's called text parsing, just to get rid of all the junk. Then, for the stuff that matters, it does sentiment scoring, basically giving it a grade from super negative to super positive. But look, one tweet or one headline isn't enough, right? So the third and maybe most crucial step is aggregation. This is where it combines thousands of these scores over time to get the real big picture. And finally, that leads to signal generation, where all those insights can actually trigger automated trades. And where is it getting all this info? Well, pretty much everywhere. We're talking mainstream news, millions of social media posts from places like Twitter and Reddit, the exact language CEOs are using in earnings calls, and even tiny changes in the wording of official SEC filings. It's just a staggering amount of data that no human team could ever possibly process. And if you need a perfect example of why this all matters, just think back to the whole GameStop saga. That wasn't driven by boring financial metrics. It was driven by a huge wave of collective emotion, all organized on social media sites like Reddit. It was a really powerful and, for some people, a very painful lesson in just how much retail market sentiment can shake things up. So how do traders actually put this data to work? Well, it's not as simple as good news means buy, bad news means sell. They use some pretty sophisticated strategies. For instance, some use a wave of positive sentiment to confirm that a price is really breaking out. And others, they do the complete opposite. They look for extreme optimism as a contrarian signal, a sign that the market is getting exhausted and is about to flip. It all sounds incredibly powerful, doesn't it? Almost like a crystal ball built out of data. But, and this is a huge but, this brings us to the biggest question of all. Is the AI really understanding human psychology, or is it just getting very, very good at spotting patterns? Because when we look a little closer, we start to find some really critical blind spots, where the machine's perfect logic just completely fails to capture the beautiful, messy, irrational chaos of human behavior. History is just littered with examples. During the 2008 financial crisis, all these AI models trained on past data, they just couldn't see that black swan event coming. Then you have the 2010 flash crash, where competing algorithms actually caused a massive, terrifying market plunge. And yeah, even with GameStop, a lot of the AI systems were totally caught off guard because they just couldn't predict such a powerful and, let's be honest, seemingly irrational collective movement. And hey, it's not just academics pointing all this out. Researchers went directly to the source. They surveyed dozens of active traders and investors, the people in the trenches every day. And what they found was this deep, overwhelming sense of professional skepticism. They asked them the big question: could AI fully replace you? And the answer was staggering. An overwhelming 74.6% said no. And the reason they gave? AI just doesn't have the ability to truly understand market psychology. That is a massive number coming from the people on the front lines. And here's another layer to the problem. More than half of the traders they surveyed believe that big institutions can actually manipulate the markets specifically because they know how the AI algorithms are going to react. They can essentially trick the machines, which makes all their predictions unreliable. So that brings us to the final and maybe most telling piece of data, which is all about the future. Will AI ever be able to close this gap? Well, the feeling is exactly the same. 74.6% of traders believe that human psychology is just too complex for an AI to ever truly replicate. They basically see it as a permanent blind spot. Okay, so we've heard two very different stories, right? On one hand, you've got this incredibly powerful new tool, and on the other, you've got its fundamental flaws. So where does that leave us? Well, it turns out the answer isn't a competition. It's a partnership. It really starts to make sense when you lay out their strengths side by side. I mean, AI is just unmatched when it comes to speed, processing huge amounts of data, and spotting patterns. But we humans, we bring something totally different to the table: context, intuition, judgment, and maybe most importantly, the ability to adapt to something completely new, something that isn't in the training data. And this is the exact same conclusion the researchers came to. After all their work, they said that AI should serve as a complementary tool, not a replacement for human intuition, that a balanced hybrid approach is essential. But here's the real kicker. Even the people building and pushing for this technology, they agree. Stockgeist, the same source that laid out all the promises of AI, says right there that sentiment analysis is hardly ever used alone. It's almost always layered with other strategies to help a human trader improve their timing. So basically, both sides of this argument are ending up in the exact same place. So after all of that, what's the big takeaway? What's the bottom line for the future of financial trading? Well, it's actually pretty simple, but it's also incredibly powerful. The future isn't man versus machine. It's man with machine. Here's a good way to think about it. AI is absolutely brilliant at analyzing the data to tell you what is happening. It can spot a trend, it can measure a shift in sentiment, no problem. But the human trader is still absolutely essential for understanding why it's happening, and maybe more importantly, what on earth to do about it. Which leaves us with one last, kind of fascinating question to chew on. As these AI systems get exponentially smarter and more complex, will they ever truly learn something that feels like human intuition? Or will their pattern recognition just get so good, so fast, that for us on the outside, it will just start to look like instinct? It's definitely something to think about as we watch this incredible technology keep evolving.